I smoke my earth, I told the God I'm getting tired.
How's it going? I'm going to be showing you what an SMT divergence is today. Let's just hop straight in. What's an SMT divergence? It's just when correlated pairs such as NASDAQ and then the S&P 500 diverge from each other. So, I mean, that's pretty much all it is. But I'll show some examples here. These are PDFs for my Discord. Just go straight in. When we're looking at the chart, we want to look at both pairs. This is essential because, I mean, how else you can see it diverge. But in this case, NASDAQ made a low, another lower low. But in ES's case, it made a low and a higher low. With this is kind of confirming that it's an SMT because ES never took this low, such as here. And since we're lower and making lows, this is a bullish SMT. As to why price went up from there. Vice versa here, this is a bearish SMT. Thing is with SMT, it's probably the biggest hint the market gave you. It's also a sign that smart money is in the market, which is good if you know how to spot it. Another thing about SMTs, how to add it to your trading. What I personally do is I look for the SMT and then I look for my confluences. So if I see an SMT, then I'll check for my confluences. Vice versa, if I see my confluences, I'll check for an SMT. If I don't get that SMT, I usually will not take the trade. There are some instances where I will take the trade. It just all depends on conviction. And if I don't get that, then I don't take the trade. Just start looking for it. It's a simple concept that can really, really change just how you trade. Okay, so here's a good example of an SMT divergence. So this is NASDAQ and ES. You can see the correlated pairs, high, low, low, you know, you get the point. Just looking at market structure, we have a high here, same on S&P 500. So let's see, oh, sorry. Let's see what happens. Okay, so here on S&P, we created a high, higher high, and on NASDAQ we created a high, but we never created that higher high. So that's an SMT. How we can use this SMT is more of a confluence. When I use SMTs, I add confluences to it. So it's not just I'm just trading strictly SMT. It's either 2 to 3 other confluences. SMT really shows when there's a reversal happening. That's just a good way to put it. This is a good example. I'll continue to show some more. Okay, so here's another good example of an SMT. I just forgot to mention earlier that the SMT is not always important. It's mainly important with a higher time frame, either bias, key level, or other confluence. Because you'll find SMTs everywhere, but that doesn't mean they're always going to be like useful or correct or anything like that. But here's another example of an SMT. So we had NQ make a or high, higher high, and then NASDAQ. That's it. You know what I mean? NASDAQ made a high and a lower high, completing the SMT, and from there we just dump. Now we could have taken out this high again if this respected this fair value gap, but we didn't. We continued to dump through it as shown here. So, but another lesson is you're not always going to be able to use an SMT. It needs to be aligned with a higher time frame bias or key level or other confluence like that. Okay, so here's another example of an SMT. Here we had NASDAQ reach up into a daily fair value gap. With this, created a high, higher high. We look at it, ES, it created a high and a lower high, creating the SMT. Just another example. SMTs are honestly my favorite confluence and probably the most important in my eyes. I'll use them every single day. Well, objectively, but use them every single day if I have, higher time frame, alignment, and all that sorts. But yeah, this is just a quick little video on SMTs. Hopefully you understand it more. You can join my Discord, it'll be in the description below.